Good morning. It is November 9th, 2018, and this is my first video blog, so hopefully I don't mess it up too much. In today's blog, we're going to talk about mortgage rates, we're going to talk about mortgage insurance that's actually going down, and we're going to cover some other topics. So let's get started. With the election this week, we kind of were wondering what rates we're going to do, and obviously the day after the election, the stock market rallied 500 points, which usually is pretty bad for rates. But rates worsened a little bit this week. We'll go over that here in a second, but for the most part, not as bad as we really anticipated. The Federal Reserve did come out this week and indicate that there are no price hikes this month, which was anticipated, but looks like there's probably about a 95% chance that the Federal Reserve is going to hike rates next month by about 25 basis points. Now, this doesn't have a direct relationship to our rates, so when the Fed raises by a quarter, our rates don't go up a quarter point. What typically happens is the Fed is increasing rates for fear of inflation, and inflation is not good for mortgage rates. So when the Fed raises rates, it indicates that there's inflation in the market, and the Fed is trying to stave that off. This week we also had the producer price index. This is inflation at the producer level, not much, but next week's consumer price index will be a market mover. We also had unemployment numbers. I go over this because unemployment is going to dictate housing. And the more people that have jobs, or the less amount of people that are filing for unemployment, the better. This week we had 214,000 new applications, which is in line with what it's been for quite a long time. And that's also at a 60-year low. Next week we're going to have consumer price index, which is always a big gauge of inflation at the consumer level. That will be looked upon, and then we'll also have retail sales. So let's take a look at the charts. So you can see this week we had just a little bit of a worsening, not too much. We'll see where the week ends. Looks like we're getting a little bit of improvement. Yesterday we had a significant dip in rates, and we hit across this line here, which is kind of a stop for us. The next stop is right here. So this is the 5% line, so rates will continue to hover at the 5%. This is about the 5 1/4 line here, which means if we drop down to this one here, we're going to be in the 5 1/4. The bad part about this is if for some reason we fall below this line, the next level of support is off the chart, literally, and that would mean interest rates are going to be in the 5.5 to 5.625. So like we've been saying for quite a few weeks, we see no reason in the world to float a rate. We want to lock in rates. If you're doing new construction, we recommend that you lock in rates at this point in time. There's just no reason to look for rates to improve anytime soon. So with that, let's talk about some reduced mortgage insurance. So as less and less people are purchasing houses right now, lenders are getting more competitive. And they really can't get competitive with rates, although we do have some lenders that have some pretty good rates. What they can do is they can start getting a little bit more competitive on mortgage insurance. So we have one of our lenders that has reduced their mortgage insurance significantly. And it's really nice because it benefits your borrowers by making their payment less. So if we look at this example of a chart I've made, we can see that a FICO score of a 740, typically the mortgage insurance right here is 0.67. This is on a 3% down program. But the new mortgage insurance rate as of yesterday is actually 0.46. So that saves up to $42 per month on a $250,000 house. What really got competitive is that 680 mark. And typically it was 1.21% on an MI, or $244 per month. This has gone down to all the way down to 0.75, or $151 per month, or a savings of $92. So the cool thing, obviously being a mortgage broker, we can shop not only mortgage rates around, but now we can actually shop around mortgage insurance rates too. So it pays to shop around. Sunday is Veterans Day, and no matter how you voted on Tuesday, what your religious preference is, or whether or not you like Coke or Pepsi, you have the right to make that determination, and that right came at the sacrifice of our veterans. So please make sure you thank your veterans this weekend, And from me personally, I want to thank all the veterans that are viewing this video. Have a great weekend, and we will see you next week. Give First Choice Mortgage a call today and let us show you how easy, simple, fast, and professional mortgage lending can be.